Earnings season trades. During this section, we're going to be talking about a variety of earnings opportunities that show up throughout earnings season. These opportunities can be before, during, or after an individual earnings report. So, what kind of opportunities do we typically see? Well, I like to categorize these in three different ways. Number one is going to be pre earnings momentum. This is when a stock is either going to move up or down in anticipation of earnings. This is a trade that I'll usually do starting about 3 to 4 weeks prior to an individual company's earnings report. I'll look at a stock and I will decide if I'm bullish, bearish, or I don't think there's going to be a big move going into an earnings report. And at that time, I will make my bets based on which stocks I think will have the biggest move ahead of earnings. The second one is going to be overnight earnings moves. These are trades that occur overnight. Typically, they're placed right before an earnings report, and then generally, we're going to get out right after the earnings report. These kind of trades are meant to solely trade the event itself, not the pre earnings move, not the post earnings move, just that overnight earnings move that occurs when earnings are reported. The last one is going to be post earnings momentum. Now, post earnings momentum is generally only going to occur if there is a big surprise upon the earnings announcement. These moves can be either up or down, but there's typically only a trade if there's some sort of large surprise movement. Each one of these unique opportunities is going to be a setup. So, stocks generally are going to make moves before their earnings report due to sentiment. Okay. It's not, based off of what they actually reported because it didn't happen yet, right? It's generally market participants looking at the company and speculating and saying, hey, you know what? This company has done really well the past couple of reports. Typically they gap up. So I want to go ahead and be a buyer of this stock before the report so that I can participate. Well, this kind of sentiment and this kind of thinking causes moves to occur before an earnings report. And that is how we end up getting bullish pre earnings momentum. I like to call this setup the run into earnings. And basically, it occurs because investors are speculating, right? They're speculating that the company may report positive earnings, and so they buy shares before this event. When it's done in mass, it sends the stock price higher, and this movement is tradable in the options market. However, it can also happen the opposite way, and this is especially true throughout bear markets. Bearish pre earnings momentum can occur too. I like to call this earnings destruction. This happens if a company is on a bad trajectory and investors want to bail before a potentially destructive report. So this can cause the share price to fall in anticipation of the earnings report. These moves are a lot of fun to trade because, well, stocks can fall faster than they can climb. And this is especially true when investors are panicking and they want to get out. This is also, of course, tradable in the options market. Now, a kind of earnings opportunity that I particularly enjoy these days are going to be overnight earnings trades. Overnight earnings trades are trades that you're going to get in the day before earnings, or if earnings is going to be reported in the morning, or the same day as earnings, just before the bell. So generally, these are just going to be overnight trades, but because you're getting in during one session and out during another session, they're not going to be counted as day trades. So that's a benefit, especially to anyone that doesn't want or can't do any day trades. Um, the reason why these trades are very beneficial is because of volatility. Volatility rises going into earnings reports and it falls afterwards. And so it's a great opportunity to trade a rise and fall in volatility. Next, there are trade setups called the post earnings trades. What are these? Well, these post earnings trades seek to follow post earnings momentum. This is because if there's a big surprise, say for example, a company completely crushes it, investors are shocked, they want to buy into the shares and the stock moves, 1.5 to 2 times what the market makers were expecting. Well, in this instance, that momentum can actually continue on past that initial gap up, and it provides options traders an opportunity to jump on and ride that move. The same thing can happen to the downside. A company can announce some sort of terrible announcement, maybe a big miss, maybe they have one of their favorite executives leaving, maybe there's a material change in the business. There can be any number of reasons why the course of business is changing, and there's a big gap down after earnings, and that gap down looks like it's going to continue. This would be post earnings momentum that traders can trade. So let me go ahead and walk you through a few examples using my earnings hot zone in Thinkorswim. This is my custom earnings analysis tool, and I use it to crunch data and make decisions surrounding earnings reports because at the end of the day, it should really all be about probabilities and statistics so that you can better identify your edge. Let's go ahead and start off with this Tesla chart. Tesla is a ticker that I typically trade for pre earnings momentum. It doesn't come every single quarter, but statistically, Tesla has traded higher prior to earnings more often than not, and it's had some pretty big moves as well. Here's a screenshot of last quarter. This is going to be right here, the entry into the pre-earnings time frame, right where you have this white line and it shifts to green. And here's where you have the earnings report. So as you can see with Tesla, it actually climbed higher pretty much the entire quarter, even after an 8% fall after earnings, which is kind of funny because most often the best earnings runs are after you have a really positive report. Um, but what you can see here is a big rally up and then an even bigger rally up going into this earnings report. So that is what we would call pre-earnings momentum because it rallied going into earnings. Now, as you can see, Tesla at the time of this video being created is now entering the hot zone, which again is another pre-earnings time frame where we typically see this pre-earnings momentum in Tesla. Now, with Tesla in particular, I will note that, there was a bear market that occurred. And so some of those quarters that we saw with Tesla and a lot of tech stocks did not see their typical pre-earnings pattern that they always did throughout the bull market. But, what is great about these statistics is that you can look at them throughout specific time frames, crunch the numbers, and you can also trade the direction both ways. For example, during the bear market, one thing that I did very frequently was trading earnings destruction moves where we saw tickers rolling over and dying going into earnings. So let's look at a couple other examples. Here's Oracle. Oracle's one that has been really great the last two quarters. You can see that here's an earnings report right here. Oracle had a big rally going into that earnings report, which again is funny because the stock ended up gapping down 11% upon that report. So you can see how that pre earnings momentum and that sentiment oftentimes can be misplaced, but it doesn't really matter if all you're doing is trading, the move going into earnings and then you're getting out and making a different trade for the earnings report. On this chart from the quarter before last, you can see that not only did it have pre-earnings momentum, especially high volume momentum, right when you got into the hot zone, which again is that 21-day period, but it also had post-earnings momentum as well. Gapped up 5.9%, continued up on high volume. So that one had two different trading opportunities. Next, I'm going to talk about Netflix. So this is one that's typically pretty strong going into earnings with the stats up here at the top. You can see that over the last 8 quarters, looking at that pre-earnings 21-day time frame, it's moved higher on average of about 4%, which is about $15.50. So when you look at Netflix, you can see, you had minor rally into earnings here, but then you had big post-earnings momentum. You had kind of a bit of a flat time, but then big post-earnings momentum. Rally going into earnings, big post-earnings momentum. Rally going into earnings. This one was actually a little bit of a disappointment because you gapped down, but you still experience a big rally going into earnings. So Netflix is one of my favorites at this moment in time to trade that pre-earnings momentum. Here's an example from Adobe on an overnight earnings trade. This is one that I really like to trade the vol crush on because as you can see with the earnings volatility right here, you can see that the volatility climbs and climbs and climbs and gets very extreme going into that earnings report, and that volatility just rolls over. You can see the last quarter. This one was quarter before last. This one was last quarter. You can see how the volatility wasn't at the very peak directly before the report because the stock price had started pulling back just a little bit, but it had still climbed pretty substantially going into earnings. And even when it was elevated, it still rolled over and died post earnings. So that one was great for an overnight earnings vol crush trade. Next is going to be Bill. This is one that can see some pretty extreme rises in implied volatility. So you can see how the implied volatility went up, earnings report happens, and then it's crushed. Implied volatility goes up, earnings report happens, it's crushed. Implied volatility goes up, earnings comes out, volatility crashes. So when you have this volatility rise and subsequent crash, that can really give you great opportunity for some overnight earnings trades. So, in conclusion, earnings season can generally be divided into three types of opportunities: pre earnings momentum, overnight earnings moves, and post earnings moves. Each opportunity is unique. And, what's great is that these opportunities come around quarter over quarter. Sometimes you'll have more pre earnings momentum. For example, if sentiment is really strong and investors, stock market participants are really bullish, that will be the best time to trade pre earnings momentum. There are also going to be quarters where there's a lot of surprises. And so you see great opportunities for post earnings momentum. But, the one that I like the most is those overnight earnings trades. And, people say, hey, they're binary. So you can't possibly know, which direction a stock is going to go. Well, you can still use your probabilities. You can still use your macro research, your fundamental analysis. You can look at your chart patterns. But most of all, more than anything, so volatility goes up going into earnings and it goes down afterwards. So that's why that is going to be one of my favorite earnings related opportunities. So thank you very much for joining me for this video. And during the next video, I'm going to be talking about how to use options and statistics to trade earnings. I look forward to seeing you in the next one.
Hey traders, if you love this video and want to take your trading to the next level, come join us in the Mastering the Trade room. This is where I focus on low risk, high reward strategies along with the rest of our trading team. You're going to find live charts, live analysis, and live trades always made with real money. Click on the link in the description to join our community and learn more today.